Hey guys, how's things? Welcome. All right, so thanks for tuning in to our training session today. If you are watching this on repeat, please share with me in the comments below where you're from and what kind of business that you have and who you are. Love to get to know a little bit more about you. All right, here's a quick summary of the 3 key takeaways we're going to discuss today. 1, paying yourself the right way. 2, what is a reasonable salary for an S Corp? And 3, how to make salary payments to yourself. All right, how are we going to start paying ourselves a reasonable salary? And is it time to give yourself a raise? So today we're going to talk about all of these things so that you don't send the wrong message to the IRS. Who am I? I'm Caitlin. I'm the owner of Citizen Virtual Business Services. We are a virtual bookkeeping company, and our goal is to help 7-figure plumbing contractors to increase their profits without spending any more time in their books. Here we go. Step number 1, when you have your own business, you earn money in a few different ways: S Corp distributions and taking a salary. What is a distribution? Distributions are the profits and losses that come through the S corporation to you as an owner, shareholder. Distributions are not your employee wages and are not treated as self-employment income. So you don't have to pay payroll taxes on distributions from your S Corp. What's a salary then? A salary is the money that you pay yourself as an employee of the S corporation, your employee wages or your reasonable compensation. You have to pay payroll taxes on your salary just like any other employee. And payroll taxes can add up fast. So any income that you take as distributions rather than a salary saves you that cost in taxes. But before you get too excited, the IRS has a basic guideline to keep anyone from taking all of their gross receipts as distributions rather than salary. So you have to pay yourself a reasonable salary. So that's step number 2. Leads us right in. What is a reasonable salary for an S Corp officer? All right, the IRS defines reasonable salary as at least what other businesses pay for a similar service. So if that's confusing enough, it's mostly up to you to decide how much employee salary to pay yourself versus how much to take as a distribution. So this might seem like open season for payday, but you have to make sure that whatever you do, it follows the IRS's rules. For example, reasonable pay is the amount similar to the businesses, again, you would pay to the same or similar services. So what do workers in your, say plumbing industry tend to pay under as an employee? So when you're deciding how to pay yourself, think about your training and your experience, your responsibilities, your time that is devoted to the business, what a comparable business would pay for similar services, and compensation agreements. And just remember that the reasonable salary requirement for S Corps only comes into play if you and any other shareholders on the business take distributions from the company's profits. The IRS can't impose a minimum salary requirement, so don't fret if your business isn't earning enough yet to pay yourself a salary comparable to other people in your field. But check out the Bureau of Labor Statistics, Glassdoor, pay scale for employee compensation information, so you have an idea that if what you're paying yourself is what you're worth. And of course, if this conversation scares you a little bit, get help from a professional. That's what we're here for. You just don't want to wait until tax time to find out what you could have done to save yourself some of your hard-earned money. So what's step number 3? All right, let's talk about how to make salary payments to yourself. So once you organize your business as a legal entity, paying yourself gets just a little bit more complicated than just collecting money from clients and customers. So it's very important to operate like a business with employees, even if you are the only employee on payroll. So check the requirements of your state on what your business has to pay as S Corp, since each state has different rules and contributions. But as an S Corp, it's up to you to determine how often you pay yourself through payroll. So some business owners choose to pay themselves a salary just once a year annually, but it's actually kind of smart to pay yourself at least quarterly because your business might have to make quarterly payroll and income tax payments and filing quarterly employment tax returns. So it might be a good idea, instead of doing annual, to at least do quarterly. And if you ever need more money, you can just take a shareholder's distribution at any time. So that can be a simpler and more tax efficient way to boost your income periodically, because you're not going to be withholding taxes on distributions. And here's a small insider's tip. You don't have to pay yourself the same salary every single payday. You can pay yourself a relatively small amount of salary every quarter and then pay yourself a hefty year-end bonus if you want. Okay. What's the big takeaway? Running a business of one, taxed as an S Corp, can be a smart way to save a good amount of money on your taxes. Is it for everybody? No. And should you maybe talk to your CPA or your tax specialist, the person who's going to be filing your taxes for you, about your tax status? Absolutely. The goal is to meet your tax requirements while paying yourself the amount that you deserve. You wouldn't pay an employee an unfair wage, so why would you do that to yourself? At the end of the day, complying with S Corp tax requirements and all of the other legal requirements that come along with running a business can be time-consuming and very frustrating. Many business owners hire a professional tax service or a bookkeeper, accountant, financial professional who can handle the hard work for them. If you need support on this, feel free to comment below with next steps, and I will reach out to you to talk about how we might be able to support you. If you currently don't have a team to support you in this, again, feel free to reach out to us to see if we might be able to help. And if you know of a business owner or colleague who might benefit from hearing this information too, be sure to share this video or tag them below and we will reach out to them as well. All right, we look forward to seeing you in our next training video.